Hey, hello, welcome back. This week I just thought of reviewing a lot of hype on this specific IPO. So thought of explaining my point of view. It's my point of view based on the data backup, based on the data available. So it's based on the data. I'm putting my point of view. So it's end of the day, it's your responsibility. I'm not a SEBI registered advisor, so you have to learn from your side. This is a guidance. You can the way I am reviewing might be different or might be wrong. I don't care. Okay, it's up to you. I'm trying to guide you how to review, how to analyze the IPO. So this you can take it as a learning. Also, you can take it as a example for how to review an IPO. So let's get into the detail. This is Sundar, and you are watching Mindful Finance. So we are going to discuss today HDB Finance's Financials IPO, which is going to release soon. So let's deep dive into the company and the details so that you'll get a clarity about whether is it a right choice for you to rush to the IPO fever. All right, let's see. So basically, HDBF, we can call it HDB. Okay, HDB is a short form of this one. So we'll call going forward, I'll be calling HDB. Right. So this was actually a subsidiary of HDFC Bank. So completely it is backed up by HDFC Bank and supported by HDFC Bank, and it was started around 2007, and it is specialized in small business loans and vehicle finance. So this is not a core banking thing. This is a NBFC. First of all, that is the one, and which is having like 1.9 crore customer primarily in tier 2 and 3 cities. And HDB delivers essential financial service. These are the areas where getting a loan from financial like core banking might be a difficult options, right? So that is where the sector or the area they are focusing for. So coming back to the financials of HDB. Before that, let's check the history of the bank. So it was started around 2007, and then it was a time that market was down, right? It was a time where the 2008 crisis happened, and then it has to go through that phase. Later point of time, slowly it grown. Always it is under HDFC umbrella, right? So it was not exposed much, but it was slowly growing. That is the key point here. And here we are now, which is like second largest NBFC in India, which is coming as an IPO. Branches are almost like 1,350 plus branches, and loan book of almost 65,000 crore. Okay, that is the AUM they're handling. It has a consistent growth of 15%, and it is growing with a return on equity of 14.7%, and net NPA is less than 1%. As per the recent news, so SEBI has filed in June. The IPO will be available during the date of June 25 to June 27, and the listing will be around July 2nd. And the issue structure is such a way that I explained already. It's 12,500 crore total offering, and in that 2,500 crore is a fresh issue, and 10,000 crore is OFS by HDFC Bank. And price band they have set is around 700 to 740 per share, and the PB is almost 2.4. And as per the comparing the grey market, it is already reduced by 100 rupees from the grey market. The grey market, the price has fallen. It is right now it's trading around 1,275 to 1,500 range. The key considerations is like this is backed up by HDFC Bank, and the growth was pure organic growth because it was not popular. It was not like shouted out about this bank anywhere. It is grown organically, and is a AAA rated debt profile with no immediate repayments. And so because there is a steep fall from the grey market to the listing price, we need to be very cautious why there is so much discount happening over there. And timing, again, this coincides with a wrong time because a lot of IPOs came last year and got flopped. Talking about the promoter governance, HDFC Bank holds almost more than a 90% of stake on this bank. And the point here, the important point is when it goes into public listing, as per the guidance, it should not have more than 10% stake. So obviously it has to reduce its 80% stakes. And what is its future if HDFC is going to reduce its stake? What is its future identity? Right, that is the point we need to think about. And comparing with the peers, so first I'm checking with the other banks and small finance bank to check, if you see Bajaj Finance is again uh, valued at very high price, but its return on equity is so high, right? It's so exceptionally well. And Federal Bank, if you see, its PB is lesser than HDB and its return on equity is lesser than HDB. If you talk about IDFC First Bank, they are also price to book ratio also less, and the return on equity also less. But it is a growing bank. It's a different scenario, right? And Equita Small Finance Bank also, if you compare, PB is lesser than HDB and return on equity is also less. So compared to the normal banking sites, right, still it shows that HDB is doing better than other banks. The people may ask that why I need to go to a 2x PB where I can get a cheaper valuation banks, right? That's the question everybody will ask. But this is the proof. You can see that even though its PB is higher, but ROE is phenomenal. So that is what you have to think, right? Compared to peers, it's financial sectors. Now, actually, if I compare with its peers, right, how it looks like. You see, with respect to Bajaj, we already discussed it is the best in the market, and next is Cholamandalam Finance. So that is also doing way ahead of HDB Financial Bank. And so if you see, it is at a level of almost like third stage it is. So PB ROE, if you're considering, right, so this is at the third stage. And Muthoot is doing so well than HDB Bank. And return on equity also is so good. The main reason is it deals with gold, right? And again, check with the Shriram. Shriram is also doing good. Now tell me why I need to, when I have Muthoot and Shriram, why I will go with HDB Bank. So that is the question you have to ask. When I finish this video, you'll get some clarity about how to decide on this one. Let's go there. So based on comparing with all these NBFC sectors, it clearly shows that HDFC is leading with 30% loan growth, right? If PB might be a different scenario, ROE might be different scenario, but compared to all other NBFC, it is growing with a loan growth of almost 30%, which is phenomenal. Okay, and because the other competitors are only 15 to 25%, and quality of loan asset quality, if you see, right, this is the second best after Bajaj. Cholamandalam, Shriram, they are facing so much problem in the asset quality, and NPA also, it's 1.9%, so the industry is 4%, but NPA is almost lesser than 1. Okay, I covered earlier, right? But this is the recent news I got. That was earlier last year financial based on the last year financial data. But this is the recent one I got where it says 1.9%. So NPA is growing. So that is the problem I find out. And valuation wise, if you see, as everybody knows that it's at 2.3x, where Bajaj is at 5.8x. Now, talking about the growth of this, the growth rate, how this bank is going to grow, right? It is not going to be great momentum based stock, I would say. It's going to be like a small and slow and steady elephant, like everybody calls ITC as a slow moving elephant, right? Similarly, you can interpret this bank also like a slow moving elephant. It's a strong, it has a huge potential, but it is going to be slow and steady only. So that you have to clearly have in your mind, because it's mostly focused on underserved markets, like tier 2 and tier 3 cities, and they are mainly focusing on secured loans more than unsecured loans. That way they are trying to reduce their NPAs. And since it is backed up with HDFC was one of the pioneer in integrating digital solution in the banking side, and similarly HDB also almost 97% are digital loan, and digital is going to be the most it's a high priority one in their growth, because they can target digital marketing through different media, different platforms, different things. That is the thing. Like nowadays, WhatsApp based marketing, right? So that is trending now, and social media marketing. And the best part is nowadays everybody owns mobile, so that way and WhatsApp is also another thing. So digital banking is a core banking that is having the high moat in their business, that is going to drive their growth faster than other banks, I would say. Okay. And if you ask me a scorecard for each things, you say financial is 8-star rating, I could say. And the reason is it is a 11% PAT CAGR is growing and healthy 19.2% capital adequacy ratio. And its competitive mode is AAA rating, which is like they're getting a loan also through so since it's backed up with HDFC banking, the ratings also is AAA rating. And governance wise, the management governance are proper. As I mentioned, it is backed up with HDFC and the digital platform they have owned. They are very good with uh, independent board of directors. The ratio between independent and direct directors are 1:3. So that is a very good ratio also, I would say. And the risk profile is the only problem I find out, which is already I covered that one, which is NPA is growing more. That's why I give a 6-star over there. Valuation wise, again, I give a 4-star for this one. The reason is its PB is too high for me right now. Okay, and PE also around 27. I would say it's not overvalued, but it's fairly priced. But still, that is the concern I have. Okay. And this clearly tells that this is not a short-term goal for you. This is going to be a long-term, as I given a metaphor also, like for this as an elephant, right? So that is a key point. Now tell me why you should not buy in the IPO. Before getting into why I should buy, I want to cover why you should not buy this IPO. Because everybody have this kind of a bias. They will focus only on the positive side of anything, so that they will miss out on the negative side of anything. So let's focus first negative. What is it? What? Everybody knows that, everybody talks about this one. PB is more than 2.5. So that is first point to look at. And second one is, since 90% of stake is owned by HDFC Bank, they have to sell the stake. When they sell the stake, there could have a lot of panic can happen. Even if they're going to sell slowly or whatever it is, there will be a dip in the price. And that will create a liquidity in the equity side, right? When the liquidity comes, so demand and supply issue comes. There will be more supply than the demand. So now they have to reach out to a lot of mutual fund, and they have to tie up with so all those kind of things will happen. So then only they can sell it properly. Otherwise, this is a key issue I find out, because when they start selling the stakes, the price is going to go down unless and until there's a real demand, or if they can make a block deal with the mutual funds or somebody, foreign investors, then they can give the stake out. Otherwise, it's going to be a big liquidity issue. And as I mentioned, we have better alternatives in the banking side, like Federal Bank, IDFC First Bank. But why I need to focus for this one as why I need to rush for this one when I have already undervalued stocks in my place. So these are my point why we don't need to consider this one. Now coming to the point where still you might be looking out what are the reasons to buy this one, right? The first thing is backed up by HDFC Bank. Since it's backed up by HDFC Bank, it is not going to leave this bank like orphan, right? It was its child, and there's stake on it. So it's a brand in that one, right? So they don't want to lose their brand. The customer loyalty built based on the HDFC umbrella, right? So they will try to hold that trust, right? And their the books are very clean. There might be NPA, that is okay, but the governance, it's not like IndusInd Bank or Kotak Bank or anything, right? Their books are very clean, and they are focusing on the digital first. So they are the HDFC are the pioneer in digital banking, like ICICI and HDFC. They started earlier. So similarly, they follow the path, and HDB has that first. They have the more way to achieve this digital first than other banks. And market potential, if you ask, they are mostly focusing on retail lending. And now recently M2 money also started to flow. So liquidity in the market is going to climb up, and retailers are going to buy left, right, center things. So the loans from the retailers is going to be high. So more than the corporate loans, they'll end up in more retail loans. That is their core business. So that is where the good strength I see. So final verdict from my side is, consider applying this if you want to hold this for, or if you are going to do a SIP kind of a mode for at least 5 years, because the IPO valuations are coming at a reasonable value right now. Okay, this is not overvalued. It's lesser than the fairly valued. Okay, it's not undervalued also, right? So it's coming at a reasonable price. So you can consider it, and if you feel that you are valuing a stability more than the growth, right? Growth may come later point of time, but this is stable. So if you focus on that thing, then you can go for it. But if you want to wait for some time, you can wait for some time, because if you're like immediately want to get that what is a quick listing, like if the market listed at 700 rupees and you got at 700 rupees and immediately it starts at 750 rupees, right? So you might be thinking in that way. So don't do that one. That is what my suggestion. But if you are looking for that one, you can go for that. Okay. And valuations, I said already, like it's a little bit higher, and there are chances that after listing, okay, it may go up initially because of the demand and thing, but slowly it may correct, and most of the stocks reaches or touches its IPO levels at one point of time. Okay, this also can happen. So I don't feel like to rush on this thing. So as I mentioned, the ideal investors for HDB, they appreciate the steady nature, as it's like it moves like a elephant, and this is not for anybody who wants adrenaline in their blood. So that's my end of the thing. And last word, my key point is, avoid FOMO. Don't just feel you are going to miss out this IPO. Normally in the investing scenarios, patient people who are in a patient, maintain the patience, they won more than people who are rushing for the game, right? That herd mentality kind of thing. So, and also price matters, right? Look for reasonable valuations. 2.5, if you feel it's good for you, go ahead. I don't want to comment on that one. But if you want a quick return, please skip this one. And remember one point, good company is not equal to good stock at any price. This is a key point, okay? Write down anywhere. So good company is not equal to good stock at any price. So don't let your optimism bias cloud your judgment. Apply with logic, not FOMO. So this is my point of view. Hope you got my idea. I try to give my humble review about this company. Personally asking, if you ask me, I'm not IPO fan. I don't rush for any IPO. I wait for a couple of quarters, check for its valuations, and every IPO comes down to its price at one point of time. So I have no rush for me. There are 4,000 or 5,000 stocks in the market. I don't care about any IPOs. There are undervalued stocks are available in the market. I don't have that FOMO kind of a mindset at any point of time. So that doesn't mean I try to give any biased opinion. I try to give my humble and neutral opinion. So if you like it, give a thumbs up. If you have your point of view, share your point of view in the comment. I would like to hear from you. Thank you so much.